What's going on, everybody? We are back. Welcome to the channel. This is the first video I've done in almost 2 weeks, or about 2 weeks. So thank you guys for tuning back in. If you're new, then welcome to you guys. Welcome to the channel. We're going to change the way that you guys trade in the stock market. So what we teach here is very, very simple. There's no indicators. We strictly use what the candlesticks are telling us. Every candlestick tells a story. We're here to teach you and for you to learn how to interpret that story. This is our watch list for Friday, February 3rd, Lotto Friday. I put these watch lists out for you guys when I have my computers available to me, which is most of the time, almost all of the time. But I put them out for you guys every single day for free for you guys to learn. And it's not just these videos. This channel has over 400 videos for you guys to learn off of. So there's a ton of learning tools. There's a bunch of playlists for beginners, for just a basic learning tools, how to do the 30 and 30, time frame continuity, broadening formations, inside bars, outside bars, 1, 2, 2 rev strats, all kinds of really great information for you guys. Gap videos, which are really, really important. But a bunch of those videos on this channel. So if you like what I'm doing here, guys, make sure you're subscribed and click the bell. The bell gives you the notifications for when I send out these videos every single day. This platform that you see here on your screen, this is TradingView. You're going to need something like this if you're going to day trade or swing trade or whatever you're going to do. Investing, not so much, but if you are looking to actually trade, you're going to need a screen like this. So if you've never used TradingView before, if you go into the description down below, there's a link there. That link will get you a free 30-day trial to the paid services on TradingView. And then if you decide to end up using TradingView and their sub-services, you get up to $30 off of that subscription. So make sure you're taking advantage of that offer there. You guys can ask me questions down below. I will answer them. I'm also on Twitter at Mr. Clark Griswold, so go ahead and give me a follow there. And you can also find me in my Discord, Griswold Trading Discord. That link is in the description below. And everything that I offer to you guys, whether it's free or fee-based, can be found in that Discord. So 95% of it is free. There is a paid membership room in there as part of what I do, and it includes things like the Griswold Strat indicator that I've created for you guys, top 5 plays from this watch list every single day, live trade bots, send out live trades to you throughout the day of inside bar setups on ticker symbols like SPY, QQQ, Disney, CCL, Tesla, NEO. There's a bunch of them on there. So it gives you guys that. One-on-ones with me as well as part of the membership. So go check all that stuff out. It is in the Discord. It's on my Twitter page. It's $50 a month, or you buy 2 months and you get that 3rd month free. But you have full access to me there, guys. So go check it out and take advantage of that as well. So let's get started on this list. We're going to go through AMC. So AMC has you see these candlestick numbers. That's part of the indicator that I've created for you guys, as is the time frame continuity right here, the white outside bars, the yellow inside bars, Sarah Strat Sniper's 50% rule. That's all included. It's all these things wrapped into one indicator. And you can get that separately. That link is in the description down below, or comes as part of the membership, as I said before. But we have this 2 up that finished red, and it was a gap play. So 2 up finished red, and anytime I've got a 2 up that finishes red on any time frame, that's when you should start to look for a reversal back to the downside. Now, when I'm trading this, I don't need full time frame continuity. And if you're looking for that video, go check it out. It'll explain what time frame continuity is and how to kind of decipher it. But I only need the hourly and the daily in the same direction, because my trades are only taking, 3 minutes, 10 minutes, up to an hour. Okay, so I don't really trade outside of an hour. I try and get my trades in and out. Obviously, if it's running, I'm going to stay in it, but I like to get in and out of trades as fast as I can. I like to make my money and get out. So as long as this hourly and this daily are in the same direction, that's a good trade for me. So we're going to look for a reversal on AMC. It's called a 2-2 reversal, 2 up, 2 down reversal. This yellow line becomes our trigger. And most times I would tell you guys to put your targets at the bottom of the preceding wick, except for when we have these gaps. So when we have these gaps, that gap has to get filled. So that top of the wick to fill the gap becomes our first target. and then your next target would just be very simply the bottom of that same candle, and then your next one is here, then your next one is here, your next one is here, and so on and so forth. So that would be the play on AMC. I'd be looking for puts at 593, and then the targets or order of magnitude, or where the bulls have their stop losses, are what you see here accordingly. I had somebody in my room ask me if you could put targets on a smaller time frame, and she didn't hear that in any of my videos. I've talked about it before, and yes, you can, but I wouldn't go from the daily to the 5 and start putting in targets. I would go from like the daily to the 4 hour, or the daily to the 1 hour, and you can find 1 hour targets the same way. So if we went to the 4 hour chart, I'm not sure if it'll show anything here, but our trigger lines and our target lines are still showing there, and we would just go back in time and you could mark that as a target if you wanted right there. You can do it like that, and that'll just help you manage your risk better. And realistically, guys, the best traders are the ones who manage their risk the best. And I want to tell you guys that every strategy that you look at is probability based. It has to be. There's no other way around it, because no one knows what this next candlestick is going to be when it opens. They don't know if it's going to go up. They don't know if it's going to go down. They don't know if it's going to stay inside, not break either side of the previous candle. They don't know. So every strategy that we look at is probability based. And when it goes against probability, that's when risk management comes in, and the best traders are the best managers of risk. We'll go on to BBBY, exact same setup, 2 up red. We're going to look for puts at 310. There's our first target at the top of the candle at 295. And there's going to be a lot of these just because of the gap ups in the market today on Thursday, February 2nd. Here's one that isn't. It's a 2 up red. There is no gap. So we're looking for this to go down. We're going to look for puts at 149.58. And again, our first target becomes the bottom of the wick, which is what normally happens. But then we have this gap. Okay, so now we're back to the top of the candle. And then here again, we still have that gap. So your next one would be the top of the candle. And then your next one would be to the bottom. Okay, so that's BIDU. We'll move on to C. And as I said, guys, I give out top 5 plays from this list, but they're reserved for the Griswold Gold members. Okay, so if you want that, you have to become a member. Citigroup, ticker symbol C, 2 up red. We're going to look for puts on this at 51.73. First target marked out for you guys. And again, mark these out as we're going through. If you can split screen or whatever, or you want to pause and go mark them out, by all means, go do that. And you guys can have these setups. And we're learning, even if you're not going to trade these tickers, because I don't trade all of these, to be honest with you guys, but I want to give you guys the setups. So as long as you guys are putting this in and you're learning how to do it, that's what the goal is here. So Salesforce, CRM, 2 up, finish red. We'll look for puts at 172.90. First target at 167. You may be asking, where am I getting these numbers from? If you look on the right-hand side of the screen, there's our trigger, 172.90 in the yellow, corresponding with the yellow line. Green line, 167 even. Let's move on here to DIA. So a 3-1 setup. And again, you notice the outside bars, the inside bars are painted a different color. That's by design. That's part of the indicator. You'll also notice this gold bar. This gold bar represents a 3-1 setup, which does not happen very often. They are very rare. So let's go back in time. They tend to do very, very well. Here's one right here. 3-1 setup. We opened, we gapped way down off of this hammer candle, shooter candle, and then we started to come back up. So this would have been a gap play, but still that 3-1 had a really, really big move to the downside. I'll see if I can find one more here. Again, they're very rare. They don't happen very often. This is just the second one, and it was from June of, June of 22. So June of last year. And again, we gapped up, but it went on this huge, huge run off of that gap play. So if I zoom in, if you guys are having a hard time seeing that, outside bar, inside bar, boom. Okay, that's what we're looking for. We're looking for those big runs. So that's what we'd be looking for Lotto Friday off of this 3-1 setup. And again, we have the hammer candle there. Hammer candle, actionable signal. When the body is 2 times the length of the wick, that constitutes a hammer candle. Shooter candle is just the opposite, where the body would be at the bottom and the wick would be to the top. So shooter candles are a bearish pattern, hammer candles are bullish. Again, it's red. You can see the red around the yellow. Makes it less bullish, but it's still a bullish pattern or bullish setup. So we can look for calls at 341.51, puts at 338.01, and we just mark our first targets. Top of the candle, bottom of the candle. Now your targets are set. Let's move on to DraftKings. 2-up, finished red. A couple things you can do here. We have that gap, so you can mark that out. It's very minimal. The next target is down here. My guess is we don't hit that target. So again, I always tell people you set your triggers and targets on a higher time frame and go manage on a smaller time frame. The smaller down you go, the better the risk management is on the trade. So you can go hop down to the 4, the 1 hour, the 30 minute, the 15 minute, the 10 minute. I like the 5. It manages my risk the best. Allows me to lose the least, I feel anyways. I might miss some really big runs, but I also know I'm not going to blow up an account waiting for a reversal on a 30-minute or a 1 hour chart. If that makes sense to you guys, hopefully. And again, comment down below and give me a thumbs up, guys. If this stuff is helping you out, if you like what I'm doing here, please give me a thumbs up. It helps with the algos. It helps to get this information out. I do these videos for you guys for free. So again, I appreciate you guys watching. I appreciate you guys letting the ads run through. That helps with keeping these videos free. So thank you guys. Keurig Dr. Pepper, 2 down on the day, but we did finish green. We can call that a hammer candle. I'd like to see that body just a little bit bigger, but we'll call it a hammer. So we're going to look for calls at 35.30. First targets at 35.60. This purple line, let me see, is that for us to go 2 down on the 3-month, I think. Yes, so it was to go 2 down on the 3-month chart. Now again, just because we're 2 down on the quarterly chart doesn't mean we can't come back up past that line. Okay, so Keurig Dr. Pepper, KDP, calls at 35.30. Lucid 2-up red. There is a shooter candle. We have that body. It's more than 2 times. The wick is more than 2 times the size of the body. So we can call that a shooter candle. We'll look for puts at $11.86 and first target at 11.08 on LCID. MU, so this one's a little bit of conflict because we have this hammer candle. We also have a 2-up to finish red. So realistically, this could go either way. You could play this either way. You could put this trigger up top as well at 63.92. I'm going to place it at the bottom, 61.86. It's not in the top 5. It's not something I'm really going to be looking at tomorrow, but it does have this setup here. So first target at 60.39 to the downside. And at the end of this video, I'm going to go through something where we had a gap play and the 2-up finished green, but it's a little bit of a different scenario. Almost, I don't want to say advanced, but it adds an element that I tell people to kind of hang off on until they really get a hold of this strat. You'll see it at the end. So Nike, 2-up red. We'll look for puts on Nike at, where are we at? 127.86, and then the 2 targets marked out for you guys there, 126.22 and 126.01. Oracle, 2-up, finished red. We'll look for puts at 88.95. This orange line is my yearly trigger. So we've already gone 2-up on the year on Oracle and come back down. So I'm going to look for a continuation to the downside here. We'll see what happens. Puts at 88.95. First target at 88.21. Plug Power, same thing. 2-up red. We'll look for puts at 17.45. And a nice move down to 16.61 if we can get it there. It would be a really nice move on Plug Power. QCOM with the inside bar. So I didn't really talk about the inside bars on the 3-1 setup. I'm going to talk about them here, because I always tell people, if you guys are struggling, if you're new to trading, new to options, concentrate on the inside bars. That's what really helped me, was just looking for the inside bars. You can play both sides of them. They're really easy to see, and it's just something that I think someone should focus on. If you're new, if you're learning, focus on one thing, focus on the inside bars. You can focus on the 2-2 reversals, that's fine. I always tell people to do the inside bar. So an inside bar or a 1 bar, you can kind of see that 1 right there. It's what we call a 1 bar in the strat, or an inside bar, or a consolidating candle. But the inside bar, guys, doesn't break the high and it doesn't break the low. And I'm in a room on Facebook. It's like a stock options traders. A lot of people don't even know what the inside bars are. They don't know what time frame continuity is. And that stuff is super, super important to trading. And it's something that I didn't know about, 2 years ago. I didn't know about this, but it's such a game changer. Inside bars are a game changer. The time frame continuity is a game changer. And the strat in general is a game changer. It's very, very simple, and I will repeat it over and over. When you simplify when you simplify anything, it becomes simplified. So when you simplify trading, trading becomes simplified. When you don't have to worry about how to draw a bull flag or a bear flag or a double top, triple top, cup and handle, you don't have to look for those patterns. What you have to look for are the ones and the twos, and it's as easy as 1, 2, 3. It really is. But back to these inside bars or one bars, they don't break the high, they don't break the low. They stay within the range of the previous candle, and it's true on any time frame. They work on any time frame. So they stay within the range. It's a consolidating candle. And I always tell people, when you see the yellow candle, think of a spring being loaded or compacted or pushed down. And when you release that pressure, that spring explodes into one direction or the other. And we can go back in time, and I'd like to go back and do this to show you guys. Sometimes it works, not this one, but this one broke up for 2 days, trended up for 2 days. Here's another inside bar, okay? We opened and we ran all the way up, double inside bar, okay? Triggered and ran to the bottom. Here's another one. This one gapped down though, okay? But we have these big runs off of these inside bars, and that's really what I like to see, and that's what you're expecting to see. That's probability. Now, when it goes against you, what do? How do you manage your risk? That is the part that you really need to get a handle on, and you do that by, if you get into this trade and it triggers to the downside but doesn't hit targets, how are you managing it? Well, you manage it off of a smaller time frame, and you use either the candlesticks with a 2-2 reversal back up, or you let the targets, if you come through the target and then reverse back up through it, let the target stop you out. Let the candlesticks stop you out. That's how you manage trades, guys. And again, triggers and targets on the higher time frame, manage the trade on a smaller time frame. And I don't care if you use the 30, the 15, it's according to how you want to assess your risk. Okay? I like the 5 because I like to reduce my losses as much as I can. What that does is, and there's people in the Discord room that do it all the time, they'll win 1 out of 5 trades or 1 out of 6 trades on a day, and they'll finish green because they have such good risk management. They manage their risk with such precision. They're taking 5-10% losses in that range on 5 trades. That's 50%, but that sixth trade ends up running, and they let it run because they let the candlesticks and the target stop them out, and that trade runs to 80%. So yes, you lost 5 trades at 10% each. That's 50% in loss. Trading with the same amount of capital, let's say it's $100 every time, and you lose 10% of that every single time on 5 trades, well, you've lost $50. But now when you put in a $100 trade and you get 80% on it, well, now you've just made $80. Plus the 50 that you lost, you're up $30, okay? You're up 30% on the day based off of $100 trades every day. It's quite simple math. It's easier said than done to be able to cut your losses when it goes against you. But the more you trade, the better you will become at doing that. And it's a state of mind. And I think I'm going to put together a book on trading psychology, and I'll put it out to you guys, and we'll see how it goes. But it's in the works, and I'm kind of moving through it now. The other thing I'm looking at is starting a podcast. If you guys have great names for the podcast, leave it down below. I'd appreciate it. Leave them in the comment section. And we're going to talk about things in that podcast about trading, about wealth management, about building wealth, about health, about motivation and why we're here and what we're here for. So I really want to put that out to you guys. So that will be out sometime in the new year here. Let's move on to Shopify. So this is the one I really wanted to talk to you guys about because Shopify had this big gap. And we're full time frame continuity, and the one time I would tell people to go against full time frame continuity, you see this white line here? The one time I would tell people to look at a trade against full time frame continuity would be when we're at the top of a broadening formation. So this broadening formation I drew a long time ago. And this is one of the things I always tell people: do your broadening formations. I'm just going to adjust this here a bit. Do your broadening formations last. Make it one of the last things you learn, because I feel like it is very subjective. So this was drawn back in August of this year, and we went higher highs to higher highs. And now what's happened is, well, I came down. There we are. What happened is we've gapped up and we've tagged that line again. So I'm going to look for puts at 52.33 and then first targets to fill that gap. And if you zoom out on this Shopify broadening formation, we've got the higher highs to the higher highs and the lower lows to the lower lows. And we've come to the highs, we've come down to the lows, back to the highs, down to the lows, and now we're back to the highs. And that's where we're sitting. So that's the one time I would tell you guys that you can look for something to trend back down. Now, I don't know if it will or if it won't. We'll see what happens as it comes through, but broadening formations are, if you go back and look, that's how price tends to trend, from highs to lows. It's like a heartbeat. If you've seen a heartbeat scanner or one of the monitors, you see that the boom, 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 up and down, up and down. Well, that's aggregating. Similar to what you see here on Shopify on what I showed you guys, where we have the highs and we have the lows, and it's expansion in the stock. So do we get back to the bottom of that broadening formation? Does Shopify go down to, $20 $20 range? I don't know, but it's quite possible. Maybe we shoot through it and we create another broadening formation. And I have a video on it. You guys can go watch it. I try and make it easy learning for you guys. So that's Shopify. We'll go through XLV here. XLV had a 2 down. Let me zoom in. 2 down green hammer candle. So we look for calls at 133.26. Really good magnitude up to that top side. Do we get there? Maybe, maybe not, but that's why we manage on a smaller time frame. So look for XLV tomorrow. And guys, that's the list. Actually, you know what? I want to go through NEO here. NEO has a 2 up red. We've got the majority of time frame to the downside. So you can look for puts on NEO at 11.81 and first targets at 11.59. Guys, that's the list. If you like what I'm doing, give me a thumbs up. Make sure you are subscribed. Get in on the Discord. Follow me on Twitter. I'm glad to be back. It's nice to be back with you guys to do the videos. I really enjoy them and putting them out there for you guys, and the response and the reactions I get. That's really what really motivates me to keep doing this stuff, is when you guys reply with, the videos are helping you, or you show me trades that are helping you guys out, or that you've done well on. So thank you guys very much. Good luck trading on Lotto Friday. Have a fantastic weekend. We're going to have a weekly swing trade this weekend and daily setups for Monday. And then I'm going to work again on that book, the podcast, a bunch of other stuff coming out for 2023. So thank you guys again, and we will see you all on the next one. Bye-bye.